Now, the GDP numbers are coming out in about 30 seconds' time. Here to take us through them when they do come through is our business editor, Peter Ryan. Peter, what's expected?
Well, we should perhaps always expect the unexpected here, Joe, but we do know that in the last quarter, in the March quarter, GDP came in a little bit softer than anticipated at 0.4% on the quarter and 2.3% year on year. Looking for something substantially stronger this time around, 5 or 6% and 3.2%.
I'll let you look at the screen right now because that number should be coming through at any second. So the expectation was 0.6. What's happened?
Well, we have surprisingly strong GDP growth there, Joe. We're seeing that over the June quarter, growth of 1.3%.
Wow, that's a big
which is
difference to what
almost 3 times the expectations, and a whopping 4.3% year on year. That is more than just respectable. That is something that developed countries would be giving their right arm for at the moment. 4.3% year on year.
So, have you got any hypotheses as to why it is so much stronger than expected? But you don't get much of an indication from the numbers there.
We don't get much of an expectation, but it is surprisingly high, and it means that the economy is very clearly benefiting from the resources pipeline that is happening at the moment and the massive investment that's coming into Australia.
How does that sit though with the figures that we've had over the last couple of months? It's felt like it's been the case that the numbers haven't been that strong.
Well, when you think about it, it does add to that theory of the patchwork economy, because we've known that different sectors of the economy are doing it pretty tough, and those local economies in, for example, South Australia and Tasmania are basically in recession, while the big states like WA are doing extremely well. So some pretty big growth there, and I think a big indication about this is that the dollar has really taken off once those figures hit. Now 98.2 US cents. Was hovering around about 97.5 before these figures hit. Those strong GDP figures, of course, the Reserve Bank will be keeping a very close eye on that and taking that into consideration when deciding what to do with interest rates, whether or not there are further rate cuts warranted on top of yesterday's 1% cut. And of course, at the end of July, there will be official inflation data out, and the Reserve Bank will be taking a close notice of that.
It seemed to be the case, though, that the interest rate cut yesterday was more to do with what was happening, was significantly to do with concern about what's happening in Europe.
Oh yes, that decision yesterday was very much the Reserve Bank buying insurance, sending the signal that they are alert but not alarmed about what is happening in Europe, and that's a very, very serious situation, particularly with Spain looking like it might be the next nation to need a financial bailout. But clearly the Reserve Bank will be looking at these figures, seeing that annual growth and quarterly growth is well above expectations, and I think that probably even as we speak, you can imagine the Treasurer Wayne Swan would be making his way to say how pleased he is about that growth and to dispel concerns that the Australian economy is doing it hard.
Are there any implications from this figure, this surprisingly strong figure that I'll just mention once again? As you can see there from that breaking news strap that we've put up there, GDP up 1.3% in the first quarter of this year. That's the 3 months to March. The expectation was it was going to be a figure of about 0.6%, but it's way above that, coming in at 1.3%. Are there any implications from this figure for inflation? Is this an indicator that inflation could pick up a little?
Well, we know that the Reserve Bank has been looking at the resources pipeline, and they've been looking at calibrating the economy to ensure that inflation doesn't come off when these massive resources projects get underway. But we know just from earlier this week that a private gauge from TD Securities and the Melbourne Institute showed that inflation is flatlining. There's been no inflation growth, and the Reserve Bank noted once again yesterday in its statement that inflation is slowing, and that's something that they're very pleased about. So
I know this is Economics 101, but how can you have GDP surge or getting stronger like this and inflation going nowhere?
Well, the Reserve Bank has, over a very, very long period of time, looking at how to manage the economy. You recall that it wasn't that long ago when inflation was at the top end of the 2 to 3% comfort band. They've worked through that cycle of higher interest rates to move it down, and of course that's given them the opportunity to move rates lower while at the same time taking into account global developments. But they will be looking at 4.3% year on year, 1.3% over the quarter, and think, well, further down the track, inflation could well become a big problem. But for now, they've already said they're comfortable about where inflation is.
And just finally, it's a big week in terms of economic data. We had the interest rate decision yesterday, GDP today, and we've got jobs numbers out tomorrow.
Yeah, this time tomorrow morning, Joe, we'll be seeing the official labour force data from the ABS for May, for the month of May, and predictions are that the jobless rate, the unemployment rate, will move up to 5.1%.
But it's been the case over the past 3 or 4 months that with these monthly figures, there always seems to have been the expectation that it's going to increase, but it's proving surprisingly resilient.
Well, you'll recall last month that the jobless rate surprisingly fell to 4.9%, and there was a lot of concern that this may well have been a bit of a one-off. So we'll be looking for perhaps a bit of a correction on that, and those monthly figures on the jobs front are quite volatile from time to time. But if you've got a jobless rate around about 5%, that's one of the very good things about the economy at the moment, along with low inflation and falling interest rates. So by the end of the week, I think we'll have a pretty good idea of just where the economy is sitting for this week alone. It could all be up in the air next week.
Could well be. And you'll be with us tomorrow morning at the same time?
I hope so.
Looking forward to it. Thanks very much, Peter. So just repeating that news that's just come through, that significant economic data for the week. GDP figure come in at 1.3% for the March quarter, way above expectation. It was expectations that it was going to come in at 0.6%, and year on year 4.3%. So we can expect to hear from Wayne Swan, I think, within the next